Welcome back to the channel. You already know what time it is. It's your boy Finesse Monster. Thank y'all for tuning in for another video. If you're new to this channel, make sure you hit that like button, notification bell, so you can get more content coming from me. Also, be sure to add me on Instagram at the Finesse Monster. Thank y'all for the love. Let's get some lightning bolts going for $1 today on Mullen Automotive. You saw what happened right out the gate. Millions of shares being dumped on Mullen soon as the market opened. Pushed us under $1, but we got right back above it. Let's get to the topic. We're going to talk about options today. Weekly options at that. They could be a very big momentum killer for these heavily shorted stocks like Mullen. Why, you might ask? Well, I'm about to explain it to you the best way I can. Now, am I an expert options trader? Hell no. But have I learned some very hard lessons on trading options? You best believe that. So I mentioned in my last video that the max pain for Mullen stock tomorrow, May 20, was $2 per share, which it was. But however, it got updated to being $1 per share. You might want to know why. It's simply because max pain goes by the strike price that has the highest amount of options for that weekly call option or put option. If you look at the options chain, you'll see that $1 strike price for weekly call options is over 22,000 open interest. A lot of people are holding on to these weekly call options, and they're going to end up expiring out of the money. And short sellers are going to collect those premiums. Now, I know all y'all noticed the beginning of the week we rose up and stopped out at about $1.25 per share. You'll find out that most of the time those are traps set up for people to go ahead and grab some weekly call options and be stuck and end up stuck holding on to those options while the price slowly falls back down. You know, when the price runs up and slowly falls back down in these perfect down ladder patterns, looking like that they're using these synthetic shares, suppressing the price by ping-ponging the same amount of shares on the bid and ask, with the keeping the volume up but keeping the price down. That's another tactic. And besides holding up buy orders in dark pool, like I said, one of the main killers is these options. If you're buying these weekly options, you need to know the risks, and you need to know that you could be potentially helping these short sellers out with price suppression. Now, don't think I'm trying to scare you out of options. It's just that you got to know that weekly options are super risky. And we know that Mullen is a very volatile stock and is very much attacked by these short sellers and market makers every single day. Now, let's talk about some key takeaways for these options premiums that they collect. So it says the option premium is the total amount that investors pay for an option. The intrinsic value of an option is the amount of money investors would get if they exercise the option immediately. You know, exercising, it means just simply sell it out. The time value of an option is whatever investors are willing to pay above the intrinsic value in hopes that the investment will eventually pay off. And the last one is the option premium is higher for assets with higher price volatility in the recent past. Time decay on these options. You got to know that if you're getting these weekly options, you're already under the risk of time decay. So the amount of time left in the contract also affects the premium. For example, the premium will decline as the contract gets closer to the expiration. However, the pace of the decline can vary considerably. This time decay is a significant factor in time value computation. Another important note is that many options expire worthless, so accounting for time decay is crucial for avoiding and limiting losses. So with the price being suppressed and controlled on a stock such as Mullen, and you're holding these options, the less price movement that's happening throughout the day, and the options are so close to expiring, the time decay starts kicking in hard and they start losing value. Another key takeaway to look in for trading options is the Greeks. A lot of people just overlook it and just go ahead and go buy into some options, YOLO it out. But the Greeks, the two I want to touch on is the delta. The delta is a measure of the change in the options price or premium resulting from a change in the underlying asset. And then while the theta measures its price decay as time passes. So theta is for the price decay, and the delta is for the price or premium resulting changes. So those are two Greeks that you need to look out for whenever you got some time. But I know, like I said, a lot of people just overlook it. So to summarize, obviously holding shares are less riskier on these heavily shorted stocks, unless you can, get in and out on these weekly options before the big move up. Then I would suggest just holding on to shares, just diamond handing them out. We don't want to continue to put capital in these short sellers' hands so they have more power against us to hold this price down. That's all I got for this video. Make sure you like, comment, subscribe, share this with somebody else. Hope y'all find this information valuable, and be sure to follow your boy on IG. That's all I got. Stay bullish.